Hello, fellow money enthusiasts. Welcome to another deep dive into the fascinating world of digital currencies. Tonight, we delve into the perplexing world of cryptocurrency, specifically the Pi network. This digital currency has captured the imagination of many, but also raised eyebrows. Launched in 2019, Pi promised an innovative approach to mining, allowing users to earn tokens through a mobile app, no expensive rigs needed. It was a revolutionary idea, making cryptocurrency accessible to everyone with a smartphone. It seemed too good to be true, and maybe it was. The simplicity and ease of mining Pi raised questions about its legitimacy and long-term viability. Fast forward to 2025, and Pi is grappling with a price crash, skepticism, and an uncertain future. The initial excitement has given way to doubt and concern among its users. So, is Pi Network the future of finance or a digital mirage? Let's dive in. We'll explore the highs and lows, the promises and pitfalls of this intriguing project. This is a story of ambition, hype, and the wild west of the crypto market. Pi Network's journey is a testament to the volatile nature of digital currencies. We'll examine the factors shaping Pi's destiny and see if this once promising project can regain its footing. From technological challenges to market dynamics, we'll cover it all. Hold on to your digital wallets, folks. It's going to be a bumpy ride. The world of cryptocurrency is ever-changing, and Pi Network is right in the thick of it. 2025 has been a roller coaster year for Pi Network. After hitting an all-time high in January, the price plummeted by a staggering 65% in March, leaving many investors bewildered and frustrated. This crash exposed the vulnerabilities of a project that had soared on hype and speculation. The lack of concrete utility, regulatory uncertainty, and a flood of unlocked tokens contributed to the downward spiral. As we'll see, the road to recovery for Pi is paved with challenges. From securing exchange listings to addressing centralization concerns, the project faces an uphill battle to regain investor trust and fulfill its ambitious vision. Buckle up, Buttercup, because we're about to unpack this crypto conundrum. Remember that epic price crash in March? Let's break down the factors that sent Pi tumbling like a Jenga tower after one too many beers. First, the lack of major exchange listings created a liquidity crunch. Imagine trying to sell a house in a ghost town. Not many takers, right? That's Pi without Binance or Coinbase. Second, remember those unlocked tokens? Millions flooded the market, creating more sellers than buyers. Basic economics, folks. More supply, less demand, price goes down. Finally, the overall crypto market took a nosedive. When Bitcoin sneezes, altcoins catch a cold, and Pi was no exception. The March crash was a wake-up call, exposing the risks of investing in a project heavily reliant on hype and speculation. Let's talk about exchanges, the bustling marketplaces of the crypto world. Getting listed on a major exchange is like winning a golden ticket for a cryptocurrency. It brings legitimacy, liquidity, and a whole lot of potential investors. So, where does Pi stand in this exchange game? Not great, folks. Despite over 80% of Binance users voting to list Pi, the platform has yet to pull the trigger. Coinbase, Kraken, Upbit, they're all playing hard to get. This lack of access to major exchanges is a major roadblock for Pi. It limits trading volume, restricts access for potential investors, and casts a shadow of doubt over the project's credibility. Will Pi finally get its golden ticket and secure a major exchange listing? The answer could very well determine its fate. Section 5. Riding the crypto wave market sentiment and Pi's fate. The crypto market is like a roller coaster designed by Elon Musk. Unpredictable, exhilarating, and occasionally terrifying. And just like a roller coaster, individual cryptocurrencies are along for the ride. Pi Network is no exception. Its fate is intertwined with the overall market sentiment. When Bitcoin soars, altcoins like Pi tend to follow suit. But when the market takes a downturn, Pi feels the pain. Currently, market sentiment towards Pi is mixed. Some holders are holding strong, believing in the project's long-term potential. Others, scarred by the March crash, are jumping ship. The road ahead for Pi depends not only on its own merits but also on the unpredictable whims of the crypto market. Section 6. Technical tea leaves, decoding Pi's price patterns. Now let's put on our technical analysis hats and decipher the cryptic charts and patterns that supposedly predict the future of Pi Network. Technical analysis is like reading tea leaves. It's an art as much as it is a science. By examining past price movements and trading volumes, Analysts attempt to forecast future trends. But remember, these are just educated guesses. Some analysts point to a bullish divergence pattern, suggesting a potential reversal of fortune. This pattern occurs when the price of pi is making lower lows, but the momentum indicator is making higher lows. It's like a hidden signal that the market might be gearing up for a positive change. Others highlight a giant falling wedge formation, hinting at a possible surge towards $1.50. A falling wedge is typically seen as a bullish pattern, indicating that the downward trend might be losing steam and a breakout to the upside could be imminent. However, not everyone is convinced. The world of technical analysis is filled with differing opinions and interpretations. What one analyst sees as a bullish sign, another might view as inconsequential or even bearish. Skeptics point to the head and shoulders pattern, a bearish signal that often precedes further decline. This pattern is characterized by three peaks: a higher peak, the head, between two lower peaks, the shoulders. It's often seen as a sign that the market is about to turn downward. The RSI indicator, a measure of momentum, remains below 40, suggesting weakness. The Relative Strength Index, RSI, is a momentum oscillator that measures the speed and change of price movements. An RSI below 40 typically indicates that the asset is in a bearish phase. So what does it all mean? The truth is, technical analysis can be as confusing as it is enlightening. For every pattern that suggests a bullish trend, there's another that hints at a bearish one. It's a constant tug-of-war between optimism and pessimism. Honestly, trying to predict the future of crypto using technical analysis is like trying to predict the weather using a chicken bone. Entertaining, but not entirely reliable. The market is influenced by countless factors, many of which are unpredictable and beyond the scope of any chart or pattern. While these patterns and indicators can provide some insights, they should be taken with a grain of salt, preferably mined from the Dead Sea, for maximum saltiness. Always remember to combine technical analysis with other forms of research and never rely solely on it for making investment decisions. Section 7, a stablecoin on the horizon? Rumors and possibilities. Whispers of a Pi network stablecoin have been circulating in the cryptosphere, adding another layer of intrigue to this already captivating saga. Rumor has it that Pi is partnering with Stellar, a blockchain platform known for its stablecoin infrastructure. A stablecoin pegged to the US dollar could be a game-changer for Pi. It could enhance Pi's utility within its ecosystem, facilitate transactions, and attract investors seeking refuge from the volatility of other cryptocurrencies. However, this collaboration remains speculative for now. Until concrete announcements are made, it's best to approach these rumors with a healthy dose of skepticism. Remember folks, in the crypto world, not all that glitters is gold, and sometimes it's just a Dogecoin meme. Section 8. Centralization concerns a looming shadow. One of the biggest criticisms leveled at Pi Network is its centralized structure. Remember, one of the core principles of cryptocurrency is decentralization, the idea that no single entity should have control. Critics argue that Pi's centralized control over its ecosystem contradicts this fundamental principle. They worry about the potential for censorship, manipulation, and lack of transparency. These concerns are not to be taken lightly. Centralization erodes trust, a crucial element in the world of cryptocurrency. For Pi to thrive, it needs to address these concerns and demonstrate its commitment to decentralization. Otherwise, it risks becoming just another centralized platform masquerading as a revolutionary cryptocurrency. Section 9. The road ahead, navigating risks and rewards. So, will Pi Network rise from the ashes of its 2025 crash, or fade into obscurity? This is the question on everyone's mind. The cryptocurrency world is no stranger to dramatic comebacks and devastating falls. Pi Network's journey has been a roller coaster, filled with moments of hope and despair. The answer, my friends, is shrouded in uncertainty. The future of Pi Network is as foggy as a misty morning. While some believe in its potential to revolutionize the financial world, others remain skeptical. Pi has the potential to disrupt the financial landscape with its mobile-first approach and massive user base. Imagine a world where financial transactions are as easy as sending a text message. That's the promise of Pi Network. However, it faces significant challenges, from securing exchange listings to addressing centralization concerns. The road ahead is steep and filled with obstacles. Overcoming these hurdles will require innovation, dedication, and perhaps a bit of luck. Investing in Pi Network is not for the faint of heart. It's a journey filled with highs and lows, and only those with a strong resolve should consider it. It's a high-risk, high-reward gamble. Just like rolling dice or playing a high-stakes poker game, the outcome is uncertain, and the stakes are incredibly high. Before you dive headfirst into the world of Pi, do your research, understand the risks, and never invest more than you can afford to lose. Knowledge is your best ally in this volatile market. And remember, when it comes to cryptocurrency, always trust your gut, but maybe get a second opinion from a financial advisor who isn't a talking parrot. Just saying. In the end, the decision is yours, and it's one that should be made with both